Nicole Giannoni, Certified Financial Planner at D. Gates Wealth Management. And today I'm sitting down with Terry Schneer, our investment strategist, because we have just wrapped up the first quarter of 2025. So Terry today is going to give us a little bit of a recap about what happened this past quarter.
Yeah, thanks, Nicole. Good to see you. Hi, everyone. Wow, it's been an amazing 12 weeks. 12 weeks we sat up here right after the first of the year. Kind of had a little bit of a feeling of euphoria going into a new presidency, different optimistic outlook on how the economy might be kicking in with the new leadership. Market was near an all-time high as we started the first of the year, and come about mid-February, we started to see some of the effects of the election and what was going to be where we are now. President Trump talked a lot about trying to bring America back as a leader, and doing that through implementing tariffs on other countries that were unfairly trading with us. And that's the effects that we saw take effect today through his implementation of different policies and different tariffs by affecting different countries yesterday. So it's timely that we're here today at the beginning of the second quarter, but it was hard to predict where we were for the last 6 weeks in the first quarter, mostly because the market was acting like a washing machine. The water was just sloshing back and forth as the tumbler kept agitating around. And one day we'd see the market up, next day we'd see the market down based on the different sound bites and the policies that were being discussed. So in a time like that, it's kind of just, we're just kind of staying put. We have good stocks. The other analogy is good stocks are like a fresh tennis ball. It bounces and it bounces back up. So we're waiting for that to take effect. Where we see the beginning of this quarter and into this quarter is truly the markets are down today, and we're continuing to see the sloshing of the washing machine as everyone tries to digest how these tariffs are going to affect different companies. Some are all being affected, and rightfully so, and some might not. And we're going to have to see how that all plays out over the next couple of weeks. But again, the way we try to manage our portfolios is to look at where we want to be in the future at the end of this year and into the coming year, and then we try to position ourselves that way. So we feel comfortable with our holdings for clients and where we are with clients. Again, as always, if there's concerns of what's going on and you'd like to have a discussion with either Danielle, Nicole, or myself, we can offer any type of guidance that we feel we're seeing. And it's not a time to overreact. This is a time when things go on sale and eventually we put other funds to work. So it's a great analogy too, and we just try to take the emotion out of it, not always watch the nightly news sound bites, and just be able to try to not react, but to plan to move forward as we go into this. I think as some of these tariffs are going to help bring production back to this country, we're going to see, it's going to take some time, but more manufacturing will happen here in the United States, which will be great for employment and for local goods and services, and will hopefully over time make things stronger. And but sometimes we have that short-term pain to have to get to that long-term benefit. So that's where we are now. On the other side, interest rates have been coming down. That was one of the other effects that President Trump wanted to see, is he felt interest rates should be getting lower. We've seen the 10-year, which is a bond yield that we use as a guidance, come down to almost 4% today. And last quarter, it was sitting around 4.75%. So we've seen a 0.75% drop in interest rates, which is what they're trying to also feel that should be happening. That doesn't bode well for people that are using a fixed income product, but it does provide a place where people are moving money into safety, and that's why the demand for that is great, so they can have a lower interest rate for that. tomorrow we see unemployment numbers come out, and we'll probably see a little bit of a rise in unemployment, which also means the economy's slowing, and some of that effect is based on the government workers that have been let go over the last 4 to 6 weeks and 8 weeks, and just the fact that we are going to see probably a little bit of a slower period because people are spending less, and maybe companies aren't investing as much over the next couple of months until we figure out how all this gets shaked out. Been doing this for a little over 40 years, and I've seen a lot of these ups and downs, and it's always seems to be the darkest of the storm when you're in the middle of it, but we feel that we're going to come out on the other side, and we have great companies that are going to benefit well for technology and the ability to provide goods and services for our clients, and that's kind of where we are. It's and I think we were talking earlier that it might be good that maybe in about 6 weeks, halfway through this quarter, we might do another little update and be able to see where we are and see if things have started to provide a little more guidance to where the rest of 2025 goes. So.
Yeah, we had a great turnout for our investment call this earlier, in this quarter.
Yeah.
And so we're ready to do that again if, once we are getting more news, and there's, I know a lot of people are a little bit concerned right now.
Yeah.
So we want to make sure that we're keeping everyone informed and up to date with what our strategies here at the firm are.
Exactly. And it's just, we want everyone to feel comfortable and don't feel that if any question is too little or not to be called, and at least reach out to any of us to see if we can help guide you or answer that question or offer any update on your portfolio. So
perfect.
Great.
Thank you.
All right,
Thanks,
great.
Terry.
Have a good day.
Yep. Thank you for watching, and don't forget to check out our other quarterly resources that we are sending out. You can take a look at your quarterly performance review that we email, as well as our new spring newsletter, which has some exciting updates about our firm. So thank you for watching, and we look forward to connecting with you this quarter.
Great. Thank you.